The slight technical delay. We had a computer completely bomb out on us, but we're back. Thank you for all joining us this evening. This is the agenda for this evening. Quick welcome by me, which we'll cut down even shorter to make up for the time. Then we've got Denise, who's going to take you through a business and some of our clients. And then over to Willie, who's going to be taking us through what deal we have available for you at the moment. And then at the end, we're going to have a quick look at how the secure site works, and then questions right at the end. So let's get stuck in tonight. So first of all, welcome to everybody. Please tell us where you guys are from. Let's make this a nice interactive presentation. If you can see the questions there, tell us which city you're from, why have you joined us this evening, and what kind of information you'd like to get from this discussion, as well as if you're a previous wealth migrate investor, and what's your ideal sort of investment range. We'll be able to use those questions as we go through. But just wanting to introduce the panelists this evening. We've got Denise Hardman, who is the General Manager of South Africa. Good evening, Denise.
Good evening, everybody. Apologies that Jan and I need to share a laptop this evening. Welcome to everybody. Good morning, good afternoon, good evening.
Yeah. Wherever you're joining, let us know where you guys are from. Jason Foster is Sales Manager from South Africa. Jason's going to be fielding some questions for us a little bit later.
Good evening, everybody. I look forward to all the questions flying through my way. I see we've got quite a great attendance from all over. Joburg, Cape Town, Richards Bay. Yeah, so a nice mix tonight.
Great. So guys, in the chat box, please type. Let us know where you're from, why you're joining this evening. Really help us to keep it nice and interactive. We've got Willie Olofse, who's a global due diligence and deal management for Wealth Migrate, and Willie's up in Joburg. Welcome, Willie.
Hi guys, thanks. Great being here. Looking forward to sharing this great opportunity in Texas.
Cool, thank you, Willie. And then, guys, something new we've got happening tonight. We've got our senior investment consultants online with us this evening. We've got Jacques, JP, Teresa, and Willie Leroux, who will be manning the questions. So as we're going through and you guys are asking questions, they're going to be squirreling away in the background, reaching out and answering you. So please keep them good and busy. So no chats coming through yet, guys. Please come on, log on into the chat box and let us know where you're from. First off, we're just going to kick off with a quick little video about Wealth Migrate that will help explain what it is that we do.
Real estate. It's one of the most reliable and profitable investments in the world. 49% of the world's wealth is held in real estate. It's what built the wealth of kings and aristocrats. But investing in real estate for the average person is simply out of reach. It's a playground normally reserved for millionaires or billionaires. Only the top 0.1% of people own and invest in commercial real estate. There's a wealth gap across the globe that's pricing out the middle class from investing in one of the best ways to build and preserve wealth, which will enable them to give their children a better future. Studies prove that children who grow up in households who have stable financial futures do better in life. That's a fact. But too many people don't have access to it. We want to change that. Let's open up the opportunity to people who work hard, manage their finances wisely, and need a place to invest for their family's future. What we're doing at Wealth Migrate is exactly that. It's simple, but incredibly powerful. We're eliminating the typical barriers to entry when investing in real estate, whether that's knowledge, money, experience, or access. Access to what the top investors know and are able to invest in, but that you can't. We're giving people the opportunity to invest globally in commercial real estate through the internet, right alongside high-profile investors, and earn the same returns and monthly dividends. We're using the internet and our technology to give everyone access to real estate investment opportunities you've never had access to before. By giving you access to global real estate investing, our goal is to empower 1 billion people by 2020 and close the wealth gap that currently exists. You don't need to invest huge amounts of money to become a part owner of a project. It levels the playing field and helps developers start new projects. It's a win-win for everyone. We've published 19 books, including New York Times bestsellers. And then there's our technology, our secret sauce that helps you make smart investments. Now it's your time to grab this opportunity. Do it now with our trusted, secure real estate investment platform. Visit www.wealthmigrate.com to see what amazing opportunities are available right now.
Cool. That was just a quick little video about us. Hope that gives some context. I'm going to pass over to Denise to take us through a very quick business overview.
So our video has given you a bit of an overview in terms of our business, but I just wanted to drill down into a little bit more for you guys. And effectively, we're a multi-award-winning platform. And recently, KPMG Global Top 50 Company. So we offer people alternative ways to invest, and we do this by partnering with best-of-class global developers and real estate investment companies. If you look at us, there's 3 building blocks, and we bring transparency, we bring independent insights, and accessibility to the global real estate investment marketplace through a secure, listed environment. Our global due diligence system, which Billy will go through with you a little bit more detail later on when he presents our investment opportunity, is one of the most sophisticated in the world. And it is there to ensure global consistency in safety, in wealth preservation, and sustainability. Over the last 3 years, we've concluded 6 commercial real estate investment projects to a value exceeding over $1 million. $100 million, correct. And our projects vary from growth investments, which are your 18 to 24 months investments, or income investments, which is a longer term, 4 to 5 years. And they deliver an internal rate of return from 12% to 19.5% or above. Quarterly dividends between 7 and 9% per annum are paid for our income investments, as well as a capital gain at the end of the term. Just to give you a quick overview of our current clients, in 2016, 15% of our 1,488 plus users in 76 countries made an average investment of $76,000 per transaction. That's quite a huge investment amount. The minimum investment to date has been $10,000. As technology has improved and as technology continues to improve, we've dropped this minimum investment currently to a $1,000 investment. Currently, more than 70% of our current investors that reinvest with us. So over the past 3 years, we have paid dividends totaling over $2 million. Texas multifamily, which is the investment that Billy will go through with you later on, currently we have got 63 people invested in this project, and it is 56.6% currently funded.
Oh, that's going quickly, that 56%. So thank you, Denise. So let's just have a quick poll. As we want to get through these polls as quick as possible. Let us know what your level of sophistication is, please. Whether you're brand new to real estate investing, please come and just click the buttons on the screen right now. I'm going to share the results with everyone as well so you can see. If you've done real estate investing, maybe you've done residential, maybe you've done commercial. Have you done offshore? That kind of thing. The questions are on the screen. I see they're coming in thick and fast. 40% of you have voted, 50%, and still climbing. Thanks, guys, for the participation. Really insightful stuff going on here. I'm going to give it another 5 seconds. If you haven't voted, please do. Still 60%. All right. Okay, still more coming. Another couple of seconds. Thanks, guys. All right, I'm going to close it off. Thank you. Let's have a look. So, quite a mixed bag tonight, actually. That's very interesting. Only 4% have got local commercial real estate. 35% have got offshore residential. Fantastic. So, I think you guys are really, really going to love what Billy is going to take you through tonight. So, so with that, Billy, I'm going to pass over to you.
Okay. All right. I've not got control yet.
Now. There you go.
All right. Let's see if we can get going.
You got control?
All right. I am trying. The technical issues that modern technology sometimes gives us.
Apologies, everyone. We're so used to presenting off of Macs. We're presenting off of a PC tonight. There you go, Philippe. Yeah.
Let's see. There we go. All right. Sorry, that flashed by. All right. So what is the current investment opportunity? I think the title of our seminar or webinar tonight is "Let Your Money Live Offshore and Start Earning Dollar Returns and Capital Growth in a First World Country." So I think that's the great opportunity that we are bringing you, and I think what's actually making it more attractive is the fact that we've got the technology right to have $1,000 that you are able to invest to start from. So that is quite exciting for myself. So what we're looking at is what we call multifamily. Now, a lot of us that comes from South Africa is not very familiar with multifamily. It is actually a commercial institutional quality property asset class. So it technically means that when we compare it, we can now compare it to an office block or a medical office block or any type of commercial industrial. So it actually it's not a townhouse setup or a sectional title. It is actually separate housing units that can either be part of an apartment block or several buildings within one complex, much like our townhouse complex, except that it is actually not a sectional title, there's no body corporate, and the units are all managed by one property management company. So that means that the tenants actually gets the benefit of...
Before you continue, it's one of the biggest questions that we get on these webinars. I just want to highlight the importance of understanding what this is, because many countries around the world do not have this kind of investment class within their country. So if you're from South Africa, and let us know if you are in the chat box, please, which country you're from. You know, typically all you can do is own a sectional title, either an apartment or a house within a complex. What multifamily is being there is only one title deed owner, and they own the entire complex. That's right. So that's the real advantage of what we're offering here, is that you can participate within that single title deed for the entire block or the entire complex. That's what multifamily is, and that's why it's seen as a commercial grade investment. Thanks, Fadi. Back to you.
Sure. Yeah. I mean, and the thing is, what's important to note is that, for instance, this multifamily that we will be looking at tonight is a 252 unit property. You know, so if we consider what price that units will be costing at, if you group them together, it's only the institutional investors that will be looking at investing in something like this. And that's what makes this opportunity for me so exciting, is that we are participating with the big boys and are able to bring you this opportunity at $1,000 minimum investment. So if we compare it, it's like an apartment block or an entire townhouse complex, like Jay just mentioned. You know, so it does come in various sizes: a high-rise, a mid-rise, a garden style, or a walk-up that doesn't have any elevator to it. So that's a multifamily in a nutshell. I think you should not think of it as just a block of flats, but something more than that. So why multifamily? Like I said, I mean, it's the institutional guys are always looking for this type of investment because of the fact that it's stable, long-term cash flows that it gives, because there's not a lot of volatility in moving around. In saying that, the market is actually last year over 130 billion transactions took place, and this year we've already seen 8% of transactions actually taking place till the third quarter of this year. So there is movement, but it's only the big guys that can actually play and afford being part of this sector. So why is it attractive? It's because of the recession tend to make renters out of owners. You know, so the thing is, with the recession, everyone is moving to a different, moving back and rather renting than owning. What we've seen is just because of the recession, the Great Recession in 2008, the housing starts are actually 30% below the historical levels since 1970 to 2007, which means that that actually brings a upwards pressure on the rentals. You know, so the rental price does go up. It's actually around 4 to 8% that you can achieve. Where if you compare it to a commercial building in the US, you'll be looking at a 3% rental increase that you are allotted. You know, so because of the inflation rates, that is close to 1%. So millennials is actually also strongly influencing this market, just because in the past, if we look at the boom, what is it called, the baby boomers, which is I think around 55 years or close to the 55 mark, 70% of those people actually own a house. The millennials these days, only 34%. That's the age bracket, the 20 to 35-year-olds that's currently in the market. They don't want to own a house. Well, we can say mainly due to the fact that the down payment is quite high, due to the restrictions after the 2008 crash, which makes it a bit unaffordable for them to rent. But also the fact that they've seen their parents struggling through these hard times, and a lot of the properties recovering quite low, and they don't see it as an investment. They want to spend their money somewhere else. So this, I've mentioned that the rents are actually rising because of the shortage of the houses that still needs to be applied. Given that this is a commercial rated property, we're looking at cap rates, and if we compare the cap rates to an office building, we're seeing cap rates ranging now between 6 to 8%, whilst on a multifamily they are still in the low 4 to 6% levels. Now you can say, but 4 to 6 is actually lower than 6 to 8. So why is this a good thing? Well, it's actually just the reversal. So lower the cap rate goes, the higher is the yield technically. So it's an inverse comparison that we're actually making use of here. So what we want to see is that
that's great for investors, basically. The lower the cap rate, the more investors pocket. Yeah.
That is correct. Yeah. So what we're saying is why the interest rate's not going to impact it is because it's such high yields that you actually can achieve on these properties, and the interest rate currently now ranging around 4%. Yes, we've seen some action now with Trump coming in. There's interest rate movements, and we possibly will be seeing possibly a rate increase. I think they're sitting tomorrow. But there is a buffer in these cap rates to still achieve what we are looking for in the property. So what we are saying is it's an excellent risk-adjusted returns when compared to other asset classes of the real estate, such as industrial, retail, and offices. So what is this opportunity? Where is it rather? It's in Texas. And why Texas? Well, Texas is big. Most like, I think it's sort of the epiphany for me of the US. You can actually fit New England, New York, Pennsylvania, Ohio, Illinois, and Puerto Rico and Cuba combined into Texas. So that makes it the second largest population in the US. One of the things that actually stands out from the Texas is what we call the Texaplex. 80% of the state's population actually falls within this Texaplex, which is recognized as the hotspot of innovation, opportunity, and growth. The reason for this opportunities is actually the fact that there's no tax rates, income tax in this area, and that's why a lot of the cities like Dallas, Fort Worth, San Antonio, Austin, and Houston is actually growing quite substantially because of this benefits that they actually get as companies. Let me just turn on my notes. Apologies for that. So San Antonio is actually one of the cities that houses and produces most of the arms in the U.S. Austin is actually known for his high-tech environment. The Dallas-Fort Worth is basically the third largest airport, or has got the third largest airport in the world, and that's what makes this Texas able to grow to around 40 million residents by 2030. Currently, there are 27 million people living there. So, like I already said, the reason for this substantial growth is mainly because it's actually a landlord-friendly state. So it means that the companies can actually do business. They want to do business there. That's why we actually also find that 50 out of the Fortune 500 companies is actually located and can be found in Texas. It's also the second most Fortune 1,000 companies in the U.S. is also located there. So the economy itself, it actually has got over $1 trillion that it actually has got running through the books over there. I think the money actually comes mostly, I'm suspecting, from all the exports that they're doing, 260 billion a year in trade. If we consider one of the clips which you can actually find, which we should actually add to our listing over there on looking, is a video about the Texaplex, and the video was actually done in 2011. And at that time, the export was actually valued at 100 billion. So you can see the substantial growth that has already taken place in the last 5 years. Right. So I'm just waiting for the screen. So effectively, if we really want to compare this opportunities, it's a buy-to-let scenario. We're basically buying a couple of units for the main reason to letting or leasing it out. It's in Houston. As you can see, it's very there's a lot of trees, and it's well located. It's a beautiful property. The exterior has been recently revamped. The property is actually made in the garden style apartments, or it's known as a garden style apartment. As you can see, it's sort of a townhouse complex. There's 1 to 2 bedroom units. Let me just go back that you can see it maybe better. The whole idea over here is it's a small community. There's laundries, 3 laundry rooms, swimming pool, barbecue or braai areas, and actually 2 playgrounds for the kids to enjoy. So, like I said, I mean, it's a 1 and 2 bedroom units, like a townhouse. It's quite beautiful. I had the opportunity to visit it itself, and there's about 50 of the 250 units has been recently renovated, and the roofs have been upgraded, and the exterior has also been recently renovated. The property is built in 1980, so it is a Class B property, but that is where the magic comes in. Is that means that we can actually we can actually renovate and add some value to this property, and that's what's going to influence the numbers as you will see as I progress. So why Houston? Houston is basically, I think, some of us will remember of the remarks of Houston. This is what's it called? Let me just get this right. Tranquility Base here. The eagle has landed, and it is also known as the energy capital of the world. So I think a lot of people think the only thing that's happening in Houston is oil pumps, but I can assure you there's more buildings than oil wells in Houston in itself. So as I've mentioned, it forms part of the Texaplex, and it's actually the fourth most populous city in the US with 2.2 million households, which is around 6.6 million people living in this town. Only in 2050, it actually grew by 160,000 people, and most of this, I think it's around 60,000 of them, actually comes from other towns and cities up north from the rest of the US, just because they want to do business. So if it was a country, it would rank 26th largest economy in the world. That means it's actually bigger than Belgium or Norway. The Port of Houston ranks as the first in the US in foreign tonnage. Just to come back to a sort of a risk aspect, most of you would have known that in the last couple of years, the oil has been really, there was sort of an oil glut going down to around $20 per barrel, which means that a lot of people is concerned about Houston. But the stats actually says that only a third of the GDP and 10% of its total employment comes from energy. So that means it actually focuses on other industries: manufacturing, healthcare, petrochemicals, and aerospace. So if you just give me one moment, I've got some notes here. Just to give you some quick numbers, the aerospace is made out of 150 companies, which has got budgets of $4.5 billion. 2.1 billion of that is spent in Houston. 800,000 people are visiting Houston, the space stations. Banking has got 8,900 jobs over there, and the payrolls. Obviously, the bankers we want to disrupt that business, but currently they actually have got payrolls of 8.1 billion that is spent in Houston. So these people can rent houses. You don't have to worry. The energy has got 4,800 companies, and 54.7% of the U.S. gas pipeline is controlled from Houston. So, yes, there is petroleum or energy and gas happening there as well. And then I think something that not a lot of us know is that the Texas Medical Center is the world's largest medical complex. It's got 6 general hospitals, 5 nursing schools, 4 medical schools, 11 specialist hospitals. I don't know about you, but if I get sick, I'd rather go to Texas, Houston than any place else. I should be sorted out there. Right, so that's just some of the things that really supports this industry, and that's why we like Houston. What actually makes it also better is the fact that the living costs are 25.9% below the average of the major metropolitans. So that means people want to live there, they can work there, and the companies actually can flourish there. I think as well, one thing that
Really?
I missed...
Convince me, I'm going to there myself.
Yeah.
Yes, interesting enough, which I forgot, is 4, I think the stat probably differs a bit now, but 4 out of the billionaires is actually located in Texas. I think there's a bit more now. I think it's closer to 16 to 19.
Talk about a booming economy. It's quite scary.
Yeah.
Right. So what is PPA Cypress Ridge Multifamily 1? This is our first multifamily, and I think that's why for us there is a bit of an educational process that needs to take place, because a lot of us don't understand multifamily. I hope by now you sort of get the idea. You are owning a share in a townhouse complex, and you don't have to worry about managing anything. So what is it actually entails? It's a 252 units, as I already mentioned. I think it's around 80,000 square meters of property. The deal value is 15.7 million. So I don't have a quick calculator here, but I mean, you can see the number. It's quite difficult for any normal person just to get in there. So 15 million is quite substantial, and we've got a great partner in the PPA group that is sponsoring us. So the difference, I think it's around, let me get my numbers closer, 9.7 million is actually financed through the Fannie Mae, which is a government institution, at a fixed rate of 4.02%. So the project equity is 5.9%. And just for just emphasizing this partner of the PPA group, they're actually taking up 10% in this transaction by themselves. So that means they've got so much trust in the product that they're basically managing, facilitating, and building out, that they also are partnering with us in co-investing in this property. So just from a stack, the equity stack point of view, the 5.9 is made up 565,000. That's by the sponsor, PPA group, and then we've got a portion of preferred equity as well of around 3 million in this investment. Just so you know, it's at a fixed rate at 9%, and that's why we're seeing an IRR of 19.6% here, because you as a retail investor is actually getting the benefit. If you didn't go through a stable income product that we also you'll also find in our on our platform, there's a fixed return of between 8 and 10% that you'll be getting from the stable income fund, but in essence you're not sharing in the upside, and that's why this deal is so attractive. You're getting that capital gains, where the guy that's just conservative only gets the return. So that's why the average quarterly distribution will be 7.9% on average. I don't know, Jay, did you want to say something there?
Yeah. Billy's going to go into the details of how this breaks down, guys. If this was a little bit overwhelming in terms of all the numbers that Billy threw at you, we've got plenty of information we can share with you offline. Please ask the questions on the group. The investment consultants are there ready to explain all this kind of stuff as well. In simple terms, just to tell a personal little story, before I got involved with the Wealth Migrate group, my previous business, being an entrepreneur, was in an advertising industry, and I wasn't really raised with much in the line of like investment knowledge. So buy to let in South Africa was what I started to do, just because you live in a house and you understand how that works, and so renting out your house is a good idea. So we started building a portfolio, and I think we did pretty well in terms of South African standards. A number of units, then we bought a block, and with the block came this kind of opportunity to outsource the management, and that really was a fantastic thing. So we did a deal with a management agent that took 8% to manage the whole block, and they took care of all the tenant issues. So we weren't getting phone calls when the plumbing broke or any one of those problems had happened. And the frustration and the time and the effort compared to what we used to do was so much better. Now, guys, this as an investment class is that same improvement again. What is a higher risk? Investing in one building with one tenant, or investing in the underlying title deed of 252 units? See, if you have a big commercial building and you've got 1 or 2 or 3 tenants in there, or you have a small block of flats and you've got, say, 3 or 4 tenants in, if 1 or 2 of those leave, in any of those scenarios, it materially impacts you. But guys, we've got massive occupancy rates here in the Cypress Ridge multifamily, and as the tenants cycle through, it doesn't even affect the performance of the portfolio because there's 252 units. It is simply one of the best things I've ever come across from a personal point of view, and I hope we're bringing this to life for you guys. So many of you have got local residential real estate investment, I can see in the poll, and others have offshore real estate residential stuff as well. So I'm kind of emphasizing these points because 60 odd, 60, 70% of you guys combined are in residential. So the base reasons that you're in residential, guys, is for growth, is for building global wealth, is for getting great returns. I just don't think there's another way in the world that we're aware of that is better than this class of investing. So please bear that in mind as Bertie takes you through what you're actually getting into in this kind of investment.
Yeah, so in the bottom corner here, you'll see we've got what we call the GITS rating of 9.4%, or 9.4, sorry, it's not a percent. It's 9.4, and let me just get a bit of more meat to the 9.4%. So what do we consider, or did we consider for giving this property a GITS rating of 9.4? So like it's already been mentioned, the GITS stand for Global Investment Due Diligence System. Now it's a lot of things combined, but in essence it comes down to the following points: location, population growth, financials, sector preference, risks, value play, and sponsor track record. So I'm just going to page 1 or 2 slides back. If we look at the location of this property, it is located to the north. It is close to. Let me just get my notes closer here. It's close to the interstate of Interstate 45, which you can see. I don't know if you can see my mouse, but it's sort of a yes. There we go. Thank you very much, Jay. So it's basically the backbone of Houston. So you can basically get anywhere in Houston if you get onto the Interstate 45, and what they call the FM 9060 is also just running at the back of it. The property is well located. It's close to the Woodlands, which is one of the top master planned communities in the nation. It's situated 12 miles from there. It's within 14 miles from the George Bush Intercontinental Airport. It is close to the Exxon Mobil state-of-the-art campus that is home to the upstream, downstream, and chemicals companies. And I know they're also expanding. So because of the location of the property, it is actually so well located that it actually can feed from all the different companies that actually employs the people. What I also found when I was visiting it, it's sort of the type of tenant that it's not your luxury units that you will get in the Woodlands. It's your worker class. It's the guys that actually go out there and work hard, and they're not necessarily interested in owning a home, but they're happy to rent. And if, like I mentioned earlier, if the market has got a downturn, as we've seen in 2008, multifamily is the place that they turn to, because there's a family, there's a community, all the amenities is in one place. So that's what makes this place great, and that's why on the location we gave it a 9 out of 10. Because it's so well located. It's in Houston. It's in the Texaplex. It is what we as a company set up. It fits the criteria. So the next point is population growth. As you can see, 160,000 people came to Houston. In the area itself, I'm just now I'm actually thinking. I think it's Texas in itself actually created 1.7 million jobs. Or the population, sorry, let me rephrase. 1.7 million population growth in the last 7 years. So there's a lot of population growth happening, and our criteria when we're looking for investment is that there needs to be more than 3 years of population growth, because if there's no population growth, there's no people looking for jobs, there's no people spending money. So that's one of the things that we also feel is high on the scale. Then at the financials. If we look at the financials of the property, we're looking at the return, the average return of 7.9%. When we're looking at an investment, it needs to have at least an IRR of 18% plus. We need to be able to distribute at least 5% plus on the cash flow on an annual basis. The age of the property shouldn't be less than 10 years, but if we can show a value play, then and recently renovated, that makes the numbers looking great, and that's what I just meant earlier is that when we're looking at the financing side, we leverage this property at 62%. So that means is that if the interest rates go up, that won't affect us. But I have to also just point this out, is that on the risk side of things, that's one of the risks that you usually find with a property, is that if the interest rates goes up. But the good thing about this is that we've already secured a fixed term loan at 4.02%. I don't know. In South Africa, you won't see those figures pretty soon, you know. So it's fixed for 5 years. We've actually got a 2-year interest only because, like I said, if the value play, which is one of the considerations, is that we're going to renovate the other 200 units. That means that we're going to rip out most of the kitchen, replace it with new stuff, paint the place, the units, adding some new carpets, and just prettying it up and modernizing the whole units. That effectively will give us around an 8% increase during those first 2 years. That's one of the reasons why we only have a 4-year term and not the 5 years, as you might have seen on the medical offices. The reason for it is that in this next couple of years, when the property is being renovated, the rental can be increased to the maximum, and then you sort of lose the value that as able to obtained by selling the property then on. So our partner has found that the sweet spot is within 4 years, and that's why we're happy to accommodate that. So this is not a longer, 4 years is still a long period, but I think the cash flow of around 7.9%, I'll show you some more numbers just now, I think is a good deal. So what is the risks that you have to consider when buying something like this? Tenant loss, I think, well, not I think, I know Jay just touched on it now. Your tenant risk is split between 250 units. What we also accounted for in the financials is a down period in the first 2 years. So we're making provision when the units go off, the tenants move out, we can turn and upgrade those units. If, for instance, the tenant is reluctant to move on, or, well, we want them to stay on, let me just rephrase and reiterate that, is that we then provide them with a new upgraded unit, and then that ensures that we can actually cycle through the whole property in upgrading all those tenants. What you also need to consider, yeah, go for it.
Just on that, there's two things that really stand out for me. You know, these kind of investments have changed my life. If you ever tried to work with South African contractors, and if we have any on the line tonight, I'm not talking about you, but renovations can take ages. The kind of expertise that we have in South Africa isn't at the kind of speed and quality and delivery rate as we experience in the US. In the US, there's such massive standards and such massive competition between everybody, and the kind of building you know, the houses themselves are built differently, radically different kind of technology over there. It means that we can do the renovations consistently on time, in a very predictable, very professional kind of way. So everybody that we're engaging with throughout this entire investment is just the best of the best of the best. We don't want to put our reputation on the line. The reputation that we've built up as a business over the years, the very strong performing assets, comes from this extreme attention to detail in the due diligence phase, and then delivering on the promises that we set out. The other one, in terms of the risk, was that, you know, with the landlord situation in South Africa being so tricky, you know, when tenants are in and they're a problem tenant, they can really become quite a burden. I don't know if anybody's had that kind of experience. I certainly have. I know a lot of our team have. And you know, in South Africa, the law is really to the tenant. Now, we prefer to invest in states in America that are what we call landlord friendly, where we literally have more power than a tenant. What that creates is a situation that we can actually say to somebody, we're renovating your place, and give them notice and opportunity to move into a renovated place. The power from the law side is with us because we are the owner. Just those small changes make some of the most complicated, frustrating, costly, laborious problems that are found in South Africa literally dissolve. They just are simply not there. Thanks, Feli.
Sure. Yeah, one of the other risk aspects that we also have to consider is the economic downturn. What will happen if if Wall Street crashes again and we see the markets sort of going down? Now, we all think and we all hope, well, some hope, that the Trump effect will actually continue, and he promises job creation. So from that aspect, we don't foresee it in the next 4 years. But if for some reason that the interest rates do go up, we've got it fixed. Tenant loss that we just explained, the economic downturn, it's got some meat into the loan to value. So at 62% debt, the bank's not going to call for their money back. So I think we've covered some of the important risks. And as I mentioned, multifamily is the more sort of property that the guys can go back to, and they're going to rather rent than owning a property. And if they had a property, they will probably just move into a multifamily. So,
Billy, I'm just conscious about time. We're at 8 o'clock. We did have that complication with the laptop dying on us. So if we can...
I'm going to move on to the sponsored track record, and then I'm basically done. So coming up, I'll hit the sponsor track record just now. So that's one of the things of the GITS that we consider. We need to have a good and a strong partner related. So what we've did now is, what does this actually mean in your wallet? What will you earn in your wallet? So we did some numbers on $10,000. So we're going to pay in quarterly a distribution of 184. It's going to differ a bit because of the number of days in a quarter, but this is basically just rounding it up. So in the first year, you can expect around the $738 return. Year 2, 863. You're going to see a bit of a drop in year 3. The main reason for it is we now have to start paying back on that interest-only loan that we started off, and by then most of the upgrades should have taken place. So you should be seeing a bit of a upturn on in the fourth year. So overall, you're looking at an estimated return of $19,554 back in your pocket if everything goes well. We have to disclaim there's a lot of things that can happen in 4 years. So don't hold me to this 19,000, but we can assure you that we are doing our utmost with the sponsor that we've partnered up with to make sure that we are within the budgets. We, as Wealth Migrate, sits on a regular basis, running through those budgets, making sure that there's no deviations, and if there's deviations, we have the ability to renegotiate that contract. So on 100,000, it's obviously going to be a bit more, and then we did just a quick sum on $500,000 for those guys that might have that type of cash that they're looking to invest. So it makes a bit of a substantial difference. All right, so talking about the sponsor, so the PPA group. Oh, we're back to a quick poll. Apologies for that.
Let's just skip that thing. Carry on.
Okay, cool. All right, so just I actually wanted to report them. Okay, don't worry about that. Okay, so I think that's what the things that Jay actually wanted to get to, and what's important. I don't know, Jay, do you want to take us through this slide?
Yeah, sure. I mean, some of the questions that we have and some of the questions we've had tonight are in this territory. So if you have a look in the middle column, finding the right property. If you're looking to find this quality of investment anywhere in the world, you have to have significant, network. Once you've found it, then you'd have to go through all the legal steps, etc., etc., etc. You're doing all that effort yourself versus our due diligence system. In terms of cost, if you're trying to do this kind of thing yourself, you're raising the money for the down payments, you've got all the insurance, transfer duties, stamp duties, deeds office, tenant search, tenant quality, all that kind of stuff. It just adds up. It's expensive. Because of the way that we structure things, and you're coming in at essentially at the title deed, and we've structured in all the other costs. You could literally then just invest from as little as $1,000, and as Billy showed you, the more that you're investing, obviously, the more that you're getting back. In terms of returns, if you're doing it yourself, you're in rands, which is risky in and of itself, and you're risking tenant loss directly. The way we do it is that you're in US dollars. So when if you're in South Africa or an emerging economy here tonight, then as your currency fluctuates and dips, you actually earn more in your return, because if your local currency devalued, you get paid out quarterly in dollars. That's more money in your pocket. In terms of maintenance, all the unexpected stuff and late night phone calls and costs and time saving, costs and money that you have to spend is built in with Wealth Migrate. It's all hassle free, and our partner takes care of all those things. Tenants wise, you have to vet your own tenants. You've got to deal with your lease agreements, missed payments, following up on that kind of stuff. Tenant loss, again, with us, you avoid dealing with tenants altogether. And in terms of the lease agreements and all that kind of stuff, it's just the best of the best of the best. Risk, doing it yourself in a South African residential kind of situation, you've got your eggs in one basket. People are defaulting on loans and all that kind of stuff these days. With us, we spread across 252 properties in one of the highest growth, best cities in the entire world. And this allows you to diversify your portfolio, very easily. To as most of you are South African investors at this point in time, this is such a hassle-free, amazing way to get involved globally.
I definitely think, based on the research and the GIGS rating, this is a true quality investment grade opportunity.
Absolutely, absolutely. Guys, even the big companies, like the big investment companies that have billions of assets under management, like Blackstone Group, they're buying these kinds of things in Houston. so they've also identified that this is great for their portfolio too.
Okay, there's just some pictures of Cypress Ridge. So just to sum up, the gates are about the location, it's about the population growth, it's about the sector, the preference sector. So we've identified that we want to be in multifamily, we want to be in the medical office space. There's a couple of other sectors that we also want to participate in, but multifamily and medical is one of the two top sectors that we want to be in. And we're looking always for the best partners. So if I'm going to rate these guys, I'm going to rate them a 9.5 out of 10, just because they've been 17 years in business. They've got 20 properties that's actually made of 4,000 units under management. They are also a company that's been rated as a top 10 Texas company in this sector, 120 staff. They're also growing and expanding and always looking for new opportunities. They've actually are the full package. They can look after the property, they do the leasing management and the property consulting. So, but effectively, it's all different companies. So it means that there is an arm length from them. So if for some reason it happens that the company is not performing, the clear management company is not performing well in managing the property, that means actually that they can be fired. So that actually makes it a good partner to have, and that's why we gave it a GIGS 9.4. The other thing that I just want to finish off is that we do our due diligence. We work through a 140-point plan or document relating to all necessary documentations, leasing agreements, everything that's necessary to make sure that when we grade this investment, we are assured, and we are all, as a company, we also invested in this property. That's all from mine. I hope you got all the answers that you required. 19.6% IRR, and most of the returns during that is forecasted is after costs, after tax. What you get in your wallet has been taxed already. in the US, by the way. Sorry, let me just clarify. In the US. So if you bring it back to your country, there's going to be a dividend tax applicable. But other than that, the numbers we've already assured that we could get the most in your wallet. Thank you.
Cool, thank you, Billy. Thanks to everyone that's voting on that poll. Looks like the vast majority understand it and think it's a great investment. Those that are saying that they're still unclear, the investment sorry, frog in my throat. Investment consultants will be able to help you out. If you haven't voted yet, if you've just been listening, please come and answer the poll, because our team will be following up with you afterwards. Okay. There we go. So there's the results of that poll. Okay, so guys, I'm not going to go into a demo of our secure site tonight because of time. But really, our quest, our unending quest, is to make it as easy as possible for you, our client, to invest. So really, all you have to do is go to wealthmigrate.com, sign up, review the deal. You just select the investment. It's listed there. You can do your transaction online, and beyond that, you can invest and manage your portfolio. In terms of security, your investment is actually made within a listed environment. It's one of the highest regulated environments for financial transactions in the world. We also have blockchain, which is the kind of modern version of that. All of our transactions get written to the blockchain. You get your shareholding certificate, a blockchain version, as soon as you've invested. So next steps, please speak to an investment consultant. They can help you with any questions that you might have. They can send you information. They can follow up with further presentations. They really are here to help you. Just having a look through some of the questions that have come in. As we've had a tremendous amount of questions come in. That's really fantastic.
Thank you for all your questions. That's great.
And let's see, where's we got Alan from Sanditon. There are lots of guys from SA. See, the investment consultants are all reaching out to you. That's great. Great to see. Right, so that's about us for this evening in terms of our presentation. Please jot down Jason's email address. It's just simply jason@wealthmigrate.com. He'll be able to put you into contact with any one of us, answer any of your questions, and put you in contact with the investment consultants as well. Guys, feel free to leave if you would like to. Thank you. We really appreciate your time. For those of you that have joined us and still have some questions, we're just going to go into a 10 or 15 minute Q&A. So if you've got the time and you've got some more questions you'd like to have answered, we'll facilitate that now for you. Sorry guys, I've got a bit of a frog in my throat at the moment. Apologies for that. All right. Let's see, in terms of which poll would you like? Okay, it's a quick poll. So why are you looking to invest? For your child's education, for retirement? Are you wanting to create an offshore retirement fund for yourself in the future? So from the education point of view, so many of our clients are making this kind of investment to fund future education for their kids. Is it a lifestyle requirement that you have? You're wanting to be more global. You're wanting to have global financial freedom and flexibility. Are you looking at it as a better alternative to savings. So many of our clients, you know, just see the rand risk that exists and the low returns that they have in terms of South African banks give them in savings accounts. Or do you want to leave a legacy? You know, are you generationally planning here? Are you wanting to leave a global inheritance to your kids or your grandkids or both? Thank you. 55% is voting, still coming in, nearly 60%. This kind of a question really helps us shape our product. It's really, really valuable to us. So those of you that are still answering questions, answering the poll, or haven't answered the poll, sorry, please do it. I'll give you 5 more seconds. I'll close it out shortly. Okay, interesting trend happening here. Wow, look at that.
It looks like retirement is winning the race.
Absolutely. There you go, guys. There's the poll. No surprises there for children's education with all the fees must fall and university drama that we've got going on here, and the maths pass mark being dropped to 20%. It's crazy what's happening in this country. Retirement makes so much sense. I mean, essentially, you know, I got into a conversation with some clients, and they said, you know, how they see what the institutions like the big Sanlams and the old mutuals, how they build their retirement funds is they invest in they invest in commercial real estate. If you think about it, we all kind of pool our money, we give them money on a monthly basis, and what do? They buy themselves buildings. So lots of our clients just kind of see through that and decided they're willing to own the buildings that they're paying for anyway.
You know, what's interesting for me from that poll, Jay, is that effectively we are busy working on new products to bring to our marketplace next year. And a lot of the products that we bring on board are particularly for child education, for retirement, for lifestyle, for savings. So it's good to know that there's quite a good mix in terms of different products that people require from us.
Absolutely. And the guys that are looking for savings return, do have another product. It's something similar to a fund, but it's not quite a fund, where you can invest your money and we will give you a preferred return. Call it like a guaranteed return. So it's essentially like being the bank. We can then leverage your money within real estate deals, but you don't necessarily own the title. It really is just a loan facility. If you're interested in something like that, just let the guys know in the chat box that you're interested in the stable income fund. That's what it's called, stable income fund.
Product.
What was that, Billy?
Sorry, stable income product.
Stable income product. Sorry, you got to get the words right.
Yes.
Okay.
I've actually seen a question here that I maybe can just field quickly. It's about the IRR, the internal rate of return. So what makes the internal rate of return important for us is that it's a measuring tool that we use, basically taking the returns that you receive over a period of time with the money that you invested, and basically the capital return once it gets back. So it makes it easier that the internal rate of return is basically, it takes in the time value of money as well. So if, for instance, you only invested it for 12 months, you can get a specific internal rate of return. If we look, for instance, at our Kensington on Latham, that was our Australia project, that is an 18-month project. So there we had a internal rate of return. Now I have to remember correctly. I think, if I remember correctly, it was around 26% before tax, if I remember. But yeah, so technically, it gives you a measuring tool to have more than one project compared against each other. So if, for instance, we look at some of the medical buildings, they had a return of around 15%. The reason for it at that point in time is that we've got a lesser portion of a preferred equity base in that product, and that's why the capital gains in those medical offices were a bit lower because everyone shares in the pot. When we bring in something like the stable income product, that actually allows the retail investor to get a bit of a better return, which essentially you can compare it now knowing that you're going to get a bit more on the one side. So that makes it a bit more attractive in investing in the multifamily as it might be in the medical office blocks if we compare it to medical 5. So that's just a measuring tool that is worldwide used to compare specific investment products and projects against each other. So I just wanted to hopefully explain that a bit better.
IRR is one of the more complicated things to understand, but we can, if you still like more information on IRR, please just type that, and investment consultants will send you some more info. A great question here from Vikesh. Is it possible to take us through the tax implications, please? I have property in Atlanta, and tax is an absolute nightmare, and severely affected my initial IRR forecast. Vikesh, absolutely right. The reason, our background as a company was that we've helped very high net worth individuals invest in real estate overseas for years. And what you used to have to do was open an LLC, which is essentially like a PTY company that South Africans would understand. The LLC then has to be audited every year. So you basically are setting up a business setting up a company to own the property. That auditing needs to be conducted. You've got your accountant's fees, you have lawyers' fees, you're having to manage and do all the maintenance and all those costs as well. So I hear you. One of the biggest frustrations that our clients have had and that we've helped them with is to navigate through that stuff in the past with better structures. And now, whilst we're not tax experts, what we have done, and I'll explain this quite simply. I'm a techie guy, so we'll get you the right information from the compliance guys. But if you think about how you would make an investment in a stock market, like a NASDAQ or a JSE, something like that, that's essentially what we've got as a solution. So your investment goes into a global trading account. That global trading account sits on the global exchange. So it's outside the country, and that can go into either US dollars. On our platform, you would then get a US dollar wallet, what we call a wallet or a trading account, Australian dollars or a pound version, whichever country we're doing investments in. So that money then goes in there with your foreign allowance, and then when a dividend is paid out, it gets paid out to you back into your global trading account, back into your global wallet. You can then decide to either reinvest that or pull that back to your country. So the only law that we have to comply with really is that we need to return the money to the bank account that it came from. Now, obviously, things happen where you fall out of love with your bank, which happens, and if you do that, you just simply have to go through the FICA process again. Just give us just upload your new documentation, and then we can actually change that bank account. So the tax situation is about the best that we can make it. It's definitely, from a personal point of view, the easiest way that I've been able to invest globally, and our clients absolutely love it. In fact, we got a WhatsApp from one of our clients. He said I could share this with you. He said he's just loaded his new structure, invested into the project within 5 minutes. He's still blown away by what the Wealth Migrate team has done. So whilst there still is paperwork to do, it's down to 5 or 10 minutes now. We're never going to be in a situation where we don't have to go through that compliance stuff. All right, let's have a look. Great question there. What happens after the 4-year period? Do you get your money back at the current exchange rate, or can you reinvest in the same development? Jason, can you take us through your answer there, please?
Yes, Right, so following the 4-year exit, that's the big value play in this specific project. So obviously we would then sell the project at a profit due to the fact that we obviously purchased it at a discounted rate. This also hence is why your return is so much better at the end of this one.
Absolutely, and that those profits, whether they are quarterly dividends or on the sale, goes back into your global wallet, so you can really decide what you want to do with that. We have a lot of clients that actually don't want to pull the money back into the country, and so they just simply reinvest in the same in the next deal. Another great question was, I'm interested in the stable income product from Vikesh. Quite a few more of you are as well, so we will send you guys more information. Some questions: can I invest in both the stable income and the multifamily? Yes, you can. You just simply put in as much. Say you want to put $10,000 into one and $10,000 into the other. You can do that. You can essentially build up yourself. What our platform allows you to do is essentially build yourself up a global portfolio. It's like a global personal hedge fund. It's in commercial real estate. Absolutely. What laws govern the investment? South Africa or US? From Raj. We're affected by the law in two senses: where you are as an investor and your outbound and inbound money and treaties, and where the investment actually is itself. So it's both, Raj, and our system then manages the correct compliance procedures per country. Okay, let's see. Jason, was there any other key question you thought would be good to share?
Okay, to be honest, I seem to be talking like a madman tonight. So I have answered majority. So let me quickly run through if there's anything that's IRR came up for twice. So Billy has explained that in detail for us. What laws is
people interested in the stable income product. So just to everybody who has requested more information, we definitely will get back to you tomorrow on the stable income product, where the investment consultants will give you a call and run through that investment opportunity with you.
I think a nice way to understand that is if you think about it, just like how a bank gives you an interest rate in your savings account. That's one of the best ways to understand what our stable income product is that you put money in and you get paid an amount per month at a preferential fixed interest rate. So it tends to be far higher than what a savings account would be in South Africa, and obviously you have the massive advantage of it being a dollar-based return. Vili, do you have any info on what the actual rate is that we're offering on the stable income?
Okay, yeah. So let me just come in there. I think it's important. I think we definitely are planning in the first. I think hopefully in the first month, if everything goes well and everyone's back from holiday, to maybe do a proper presentation on the particular stable income, because what our aim is with the stable income, what I just want to emphasize here is that we're looking to achieve between an 8 to 10% return. We're not fixing it per se, because there is going to be a bit of structure costs going into those projects. But the idea, and that's why it makes it such a, I think, a diverse and I want to say a balanced product, is because we're basically going to invest in. It's already invested in Kensington on Latham, which is a bit of a shorter term, which have a bit of a higher return. So that's going to have a bit of an influence on your return. It is the product is also structured that we don't have more than 15% in a specific currency base. So, for instance, the Australian dollar, we didn't have an exposure more than 15%. I'm not entirely sure what is the number, because the stable product was quite launched late in relation to the Kensington project. but we will be seeing that there's like I mentioned earlier, there is a portion that is already invested into Cypress Ridge, and hopefully coming soon, Medical 7 in the first quarter, we will be seeing a portion of the stable income also invested into Medical 7, and each project as it comes along. So effectively what it will mean is that you'll get the best of all the worlds. Once we start rolling out the UK, South Africa, we're going to facilitate to such an extent that we can get to interest rates between 8 and 10% after cost.
Fantastic. We've got some great questions coming through, guys. Wow. Ricardo, we've covered off those calculations for you. We'll follow up with you with a specific calculation at that amount. If any of you would like a specific calculation at a specific amount, please just say so, and the guys will follow up with you. Yes, we will be sending out a recording of this, Desmond, no problem. Everyone's going to get a copy of it. Is this a crowdfunding model? Jürgens is asking. Jürgens, you can think about it like crowdfunding in a sense. Whilst we're not a crowdfunding company, it is a way that you can understand. We're more like a listed stock exchange concept, whereby multiple people can pull in. But what we've done is a world first in the sense that where crowdfunding is unregulated largely, and governments seem to be clamping down on it around the world because of its unregulated, unstructured environment. It tends to be only used for investments inside specific countries, if it's real estate, or in non-equity plays like Kickstarter and those kind of products. So what we've got is the best of both. We've got the kind of advantages of a crowdfunding model with all of the compliance and security and legal obligation that protects the investor within the listed exchange environment. So what we've achieved is really next level stuff, and why we've been winning all these awards, and why KPMG has actually said that we actually came 41st in KPMG's global survey of top fintech businesses. It's fascinating to see, being 41st in the list is massively humbling, because some of the other businesses in there, there's I think it was 20 listed companies, there's about 10 listed companies, about 20 unicorns. A unicorn is $1 billion business. So we're in a company of giants in that list, and it really is quite humbling.
I know that we're talking a lot about the listed environment. Just to clarify, the listed environment is the Tropex, listed on the Seychelles Stock Exchange.
So when you make an investment, you know how you get a Bloomberg stock ticker if you're investing in, say, Coca-Cola, and you can see what the share price is worth. You essentially get that, so you can see, you can actually track your investment in that same way. Great question. Thank you for that. Vikesh, another great question. You sure that this investment is subject to estate duties? How will this be handled if an investor dies before the 4-year period? Are you able to explain further in this regard? Great question. Billy, you be able to take this one forward?
Well, I think that is actually, it actually came up, I think just last week. I think what we need to consider is that it will be part of the estate, and because we are creating let me say, sorry, let me rephrase. We are in a listed environment, which means, and that's why we chose this route, is that if once we really get a lot of people interested and coming on board, it effectively means that we create a marketplace. So effectively what it will mean is that the state will come in, they will offer the share in the market, and we will then look for a willing buyer on the other end. What we have to take into consideration at that stage, what we still need to develop on is is if you do sell it, at what price will it be? So at this stage, we probably during the 4-year period of time, we'll probably only give you back the money that was invested in the investment, the project, if we get a willing buyer on the other end, which basically will mean that there's not going to be a capital gains to it per se, but that's something that we are looking into at this point in time as to valuing the project during the course of the investment. So there could be a value added to it, but I can't say that we will be adding a capital gains to that initial amount, but we should be able to sell the initial amount off to the estate.
Yeah. So we had a similar situation a little while ago in a previous investment, and we went out to the existing shareholders and said, guys, Billy, was it 100 or 200,000 became available? 200,000. And hold me to correction here, but I think it was taken up within 4 hours.
Yes, and there's people still looking for some more pieces of that action. So yes.
So to date, it hasn't actually been a problem, and has moved very quickly. You know, the quality of these deals is such that once you've done this kind of investment and you're making these kind of returns and you're earning dollars in this way, it becomes a phenomenally interesting thing, and people just want more and more and more. Hey guys, good question here about structure. Wealth Migrate does not own this investment. Very important. Wealth Migrate, what we've done is created like a separation between the investments that we make and the company holding. So we don't take money, put it into Wealth Migrate, and then go and buy the building. Very important. What we do is we facilitate the transaction through our portal. Then the money is placed within the listed environment, and the shareholders of that own the title. Wealth Migrate does co-invest, and a lot of the executives co-invest in each deal that goes through as well. And so the owners of that are then the investors that we bring on through our platform, which include ourselves most often, and the PPA group in this instance. Why that's important and why that's such a good idea. You don't want to be in a situation where Wealth Migrate is owning the whole thing and Wealth Migrate disappears. What if Wealth Migrate disappears? Well, nothing. You still own it. You are the title holder. It continues to run, and the teams on the ground and the contracts are all in place. Guys, we took a decision a long time ago, 3 years ago, to decide what kind of business are we going to be. Are we going to be a marketplace where anyone can come and list anything, and we're not guaranteeing quality, or do we want to be more like a Harrods or a Fifth Avenue Saks or something like that, where the quality of the product is extremely high? So we decided on the latter. The quality of the product is what we're about, and that's why we do make co-investments in these things. More questions around, do we hold a license from the SSB? Can a trust invest with Wealth Migrate? What are the tax implications from your release? Well, let me go through those. We are a global business. First and foremost, our head office is actually in Hong Kong. We operate out of various countries in the world. We are actually officially opening the South African market next year. I can't talk about it just yet. I was hoping to be able to talk about it tonight, but I can't get into too much detail. It's extremely exciting, and we'll be sharing that news as soon as we can in January. What that means, how do we operate at the moment? In terms of FSB compliance, we are fully FSB compliant. We can, Jurgens, if you want any more information on that, we can send you that. We're a juristic representative of the DMA. So we actually leverage their kind of trading license, and we're listed on the FSB's website as such. We are, however, when we open a South African market, going to have our specific own FSB license. So that's for South African investments. So obviously we haven't been doing South African investments in South Africa, and we're intending to do that next year. All right. So on the tax situation, I think another way to explain it then is to say that the investment is held in your personal name when you come through the stock exchange solution. Think about that like when you're moving money out of the country, you have to say what it's for. So you just literally declare that it's for an investment, and that's what you have to do. Typically what happens when you bring money back into the country and so the dividends are paid back into your South African Rand account, it's up to you to declare to SARS what that return was and what it was from. That's basically their checks and balances that they need to do. With the global trading account, though, that wallet doesn't. We pay the dividend back into that account. So you can decide if you want to repatriate that cash back on a quarterly basis, or if you want to leave it out of the country and reinvest it. And it's really up to you what you do with that at the end of the year. So there is a huge amount of flexibility there, guys, and that's one of the reasons that this solution is so well liked. Okay.
Just on the trust, you can invest as a trust. The important thing is just to know that if you take it out in the trust name, the money needs to return to the trust. So it doesn't matter what entity you invest from, South Africa or whatever country you are investing from. The important thing is the money needs to go back. That's why we do the KYCs, is to know your client. So the details that you actually list and register on is those details that needs to be compliant when we return the money.
Yeah, guys, when you log in, it'll take you a few seconds to create an account on wealthmigrate.com. When you log in and after you've picked an investment, you go in. One of the first things you have to do is say, what entity will you be investing from? Will it be your personal name? Will it be a trust, or will it be a business? It kind of splits. The process actually goes through different requirements, different channels. So the correct information is gathered down a particular route that's appropriate to each law in whichever country. All right. Is GIDS an industry standard term, or is it a Wealth Migrate proprietary system? Right. It's very much a proprietary system. It comes from a number of people. Some of our investors are guys like Henny Bezuidenhout, Peter Veenstra. These guys are some of the biggest property players around, and we've basically taken the way that they have done investments globally and systemized that. We've taken Scott Pickens' methodologies in terms of his books. We've taken Dr. Dolf de Roos, one of the most published real estate authors in the world. He advised Donald Trump in Trump University. He's advised Rich Dad Poor Dad's Robert Kiyosaki. He's one of the most well-known and well-respected authors. We've taken his methodologies and we've built that into GIDS.
And he's our president.
Yeah, he's our president and sits on our board as well. So you can absolutely see that GIDS, the checklist that we go through is why we end up with such high-quality deals. It's quite a thing when we actually go. We shortlist some opportunities, and then it fails due diligence. The GIDS score comes back too low. And that can be a sad thing, because sometimes you find that it looked like a really good investment opportunity for our clients, and then we found that something was wrong with it. Now, whilst that's potentially negative, it's actually a really good thing because we actually found the problems. And that's another thing that our clients say to us. We've got clients that just say anything above a particular GIDS rating, they're in.
So it's almost like a proprietary probability of default model that we've created around the property side.
Absolutely. All right. Rian, yes, Scott Picken is the founder of Wealth Migrate. That's quite a long time ago. We're now a business of about, I think, 55 staff. We've got an executive team that has extremely deep levels of expertise in particular areas. You know, Denise comes from a very kind of high-tech, fintech background. I come from a digital marketing background. We've got guys that have kind of run massive software development teams of 300 people. We've got legal and compliance in-house. We've got an investment committee that is absolutely second to none in the world. We've got on-the-ground performance per country that we've done over 600 transactions. We've had $49 million invested through the platform. What's that in rands? That's about, quick maths, I think that's 700,000 rand? 700 million rand? Is that right, Willie?
Testing my brain now.
Testing my brain at this time of night. And that's unlocked a deal value of around $350 million. So that in rands is something massive, like 3 billion rand, like that. Yeah. So, sorry, yeah.
4.9. 4.9 billion.
4.9 what? Oh, 4.9 billion rand. It's difficult to think in rands anymore. Apologies for that. Is 10 the highest possible GIDS rating? I think so, Raj. Willie, is that right? Yeah.
That's good.
Cool. All right. I think that's it. If anybody, we missed your question. Apologies. We've had so many. It's been difficult to kind of sift through it all. If you have a burning question that we've not answered, please pop it in there now. Else we're going to be closing out for the evening. Hope that you enjoyed this information. And look forward to helping you with your global portfolio. Just in summary, let's get back to Jason at wealthmigrate.com. He's your man. And we'll follow up and send you the information on the multifamily opportunity, a copy of this video so that you can show wives and loved ones and families if there's family discussions to be had. We've got a deadline. This closes out on the 30th of December. So guys, if you think about it, you have an annual amount that you're allowed to take out of the country. If you're still sitting with a situation where you haven't used that allowance, what that means is if you use it this year, you can invest in something of this quality, and then you still have your full allowance for next year. So why not end the year strong? Over the prize and everything that are going to be happening, a lot of our clients that have come to us have come from friends that have already invested. A lot of bright conversations actually. So chat to people about this kind of investment opportunity, and I'm sure they'll love it.
Yeah, well, I think 70% reinvestment is a huge percentage that
That's
goes
right.
a lot. And also, as a measure of good faith, for all of you that were online tonight, thank you for bearing with us in the beginning, and we'll make sure that you get a copy of Scott's PDF version of his book, Property Going Global.
Absolutely. So if you're still on and can fill in this final poll, please let us know how soon you are looking to invest. Not much time left in the year in order to do this, and we will deploy our resources to be able to help you. But quite a fair amount coming in immediately, within 0 to 3 months. I'm going to give it a few more seconds. Please let us know how soon you are looking to invest. If it's over 12 months, if you're still deciding, then I think just click over 12 months. Some of our clients were, watching us for 2 years, Clive and guys like that. They've become some of our biggest fans. You guys are, London-based investment bankers and risk analyzers. So they've, their personalities are very risk averse. We're great people and great friends now, and so we don't have a over 12 months period, but cool. Thanks, guys. It looks about half have voted. 5 more seconds. Please let us have your votes if you haven't voted yet. I'm going to share that poll as well. Okay, here we go. Here's the result. So, the bulk of you looking to invest within the next 3 months. That's amazing. So the opportunities, guys, the stable income product is a great opportunity to check out. This multifamily opportunity closes at the end of the year. So if you're in that 0 to 3 months category, and you want to participate in this fantastic deal, guys, these don't come around often. You're going to have to turn that 0 to 3 months into something like 0 to 1 month, or less, actually. Thank you, everybody. Really appreciate your time, and I look forward to connecting again soon.
Thank you, everybody. Have a good evening.
Have a great evening.
Yes, thank you very much. Have a great day.